Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, and let's talk about what is happening and what we can expect moving into a pretty potentially important week, honestly, with NVIDIA earnings. NVIDIA, of course, being pretty much like the new Apple of the stock market. So that could definitely dictate quite a lot moving forward with this market in general. But ladies and gentlemen, let's jump into it rather. If you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. That link is down below. For just $2.99, you can access all my intraday thoughts, posts, updates, technical analysis, options flow, etc. on Tesla stock, and sometimes just general market things as well. Yeah, link is below if you're interested. Check it out if you can. I'm still a little bit sick if you can hear by my voice. It's a little scuffy. But nonetheless, Tesla closing the day down about 3.2%, closing at $213.20, which unfortunately compared to the market is a bit of an underperformance. But it kind of is what it is. Right now, let's talk about this, right? There's definitely some signs of caution here. Right now, it's obviously not the worst thing in the world, right? We didn't drop 3% is a decent amount, but for Tesla, it's just kind of another day really. But let's go over the bearish things first, right? There are definitely some signs of concern that I have here right now that I do want to talk about first. The daily chart I want to talk about is going to be, we talked Friday about the stochastic, right? I said how there's a lot of things that are looking pretty good for the daily chart, and there are still some good signs, but the stochastic has crossed bearish, and it's obviously continuing to cross bearish, and it's still crossed bearish, right? So, and again, I personally really put a lot of emphasis on the stochastic. It's not perfect by any means, but it's pretty damn good in my opinion, right? And in this case, this indicator is showing a bearish crossover. It's showing that the bullish momentum has definitely dried up, right? And the bearish momentum is starting to, slowly kick in and take over. So that's something that you definitely don't want to completely ignore, right? Now, we'll go over the bullish things after, but the other potentially bearish thing that I don't like right now on the daily chart is, Friday's candle and Thursday's candle, right? We had a massive Thursday red candle. Friday was like a small kind of, green or white, whatever candle that was pretty much encapsulated, right? Essentially an inside day candle. Usually with inside day candles, what you do is you take the top of the range. So in this case, the top of the range would have been up here. And then you take the bottom of the range, which was pretty much this line that I have down here, right here, right? Pretty much right around here, right? So pretty much, what is this? 221.5 roughly, and about we'll say 114 roughly, right? The way inside day candles work is a break above or below that range usually indicates a continued move in that respective direction. So in this case, because we broke below Friday's range of about 214, that's bearish, right? That is definitely a bit of a bearish sign. It shows weakness, and that's not what the bulls want to be seeing. It's not what I want to be seeing personally as a bull, of course. And it definitely has some signs of concern. Now, we obviously, after breaking it, fell well below that, right? From 214 all the way down to pretty much entering barely the 210s. So obviously, we dropped a decent amount, right? That's a fair drop even post-block breaking it, even considering we already had that initial drop from today's high. So, but the fact that we closed below is not ideal, right? The fact that we're breaking below this range is not ideal. So this to me signals the fact that, especially with the stochastic bearish crossover, that there could still be more downside continuation to about this 207 to as low as 203 range. Right? That could be a very real possibility. Another thing that's a little concerning is the fact that there is some low volume coming in here, right? If I zoom out right here, you can see, right, the volume in this area is pretty low. And guess where we got rejected? We got rejected pretty much right where we had this little spike in volume. And now we're entering, you can see right here, some low volume area, right? This kind of range of about 215 to as high as about 220, which is what we've been trading for the past week or so, right? A bit of a spike in volume. You can see here, right? Massive spikes down here, massive spikes up here, right? 260, 250s, massive spike, right? Pretty much 170, 180s, massive spikes in volume. These are massive areas of support and resistance, or I guess resistance and support respectively. But we do have some small spikes in volume profile over here, right? The range we just traded at, which we're pretty much potentially getting rejected at, but we have a small little volume spike all the way down here, pretty much right at $200 per share as well. But the reason I bring this up is because you can see between that, their volume very much diminishes, very, very, very low volume in between pretty much where we are now, all the way down to the very low 200s, very low volume. So if it happens, and if we do move down to the low, very low 200s, I'd expect it to be quick. I would expect it to be quick because usually when you go through low volume areas like this, you expect price action to be pretty snappy, right? Pretty damn quick, because there's, again, not a lot of volume to support, the price, right? So it just kind of flushes down or up, really. In this case, it will be a down flush, obviously, if we moved back down to, let's say, 202, 203, 204, 5, somewhere around that, low 200 range. So that's another concern I have, right? I don't like that. And the final concern I have for the bearish side is the fact that, well, the 1 hour, obviously stochastic still crossed over to the bearish side, right? We have the BX trender still looking, actually making a higher low, but, still a red, a band, for instance, right? The MACD is still bearish, right? So there are definitely still signs of concern there. But the main one is the fact that we had this little, wedge, if you will, that we were forming all the way from these lows all the way over here at about 190, right? And, we've pretty much held this uptrend every single time. Now, you can make an argument, the fact that you can take this line, and again, this is why I'm not always a big fan of trend lines because they're subjective, and you can connect the dots like this, and this actually lines up to the bear tips of these little pivot points, if you will, right? And it connects actually to where we potentially did actually find a bounce today. So that is one aspect you can look at it. That's potentially a valid aspect. But the other way to look at it as well, it's like this instead. We never invalidated any candle. We never actually went below any of these candles over here, right? It was just wicks. We bounced off of it every single time. It even connects, because the issue is if you bring it down to this example that I just had, it doesn't connect to this wick that we did actually bounce pretty decently off of it too, right? A massive gap up into a massive rally, right? From 211 to like what, 220. It's a decent rally in one day. But this perspective connects this wick as well, this candle, right, on the 1 hour chart. It doesn't what's the word I'm looking for? I literally just said it. It doesn't invalidate any of these candles back here, and it pretty much makes sense with potentially what we have moving forward, which is, we came down, had a massive bounce off the trend line again, came back down to it this morning, actually held it for a few hours, you can see here, until we ultimately gave in, came back down, right, all the way to about 211, we'll say. And then we are so far seemingly coming back up to retest that breakdown. That's what it seems like we're doing right now. We're coming back up, retesting that breakdown. And assuming this retest is successful, you would expect to continue to follow through pretty much down to the real major demand zone, which again, I think will be the very, very low 200s. Could be as high as 207, could be as low as about $200 per share. But that general range, I do expect some pretty strong support to start kicking in. And the worst case scenario, if we do somehow drop below 200, would be pretty much 180s to 170s. I'd be shocked if we go lower than that. There's an insane amount of volume profile, even more volume profile, like I just mentioned, sitting there, than the volume profile that rejected us all the way back up here at around the 250s and the 260s, right? You can see massive area of volume profile, huge volume profile area. So if we do come back down here, which we did actually technically already when the market crashed on the yen crisis, if you will, right? We did actually come down there. We did bounce pretty substantially off of it. So if we do end up somehow coming back all the way down to this like 180s to 170s range again, I'd expect some pretty tremendous support. Again, it's a massive if. I'm not saying we will, but just, if we do, right? But again, the thing that's still concerning me, again, break down below this wedge essentially, right? I don't like the fact that we broke down below this wedge. That's, not ideal. Also, we lost the 214, 215 level. So the only way for me to really start getting confidence back in from a bullish perspective is to recapture 214, 215. If we can recapture those levels, that to me will be bullish. Well, not necessarily bullish, but it definitely removed a lot of this bearish perspective that I have right now based on today's price action, right? If we recapture 214 to 215, because again, keep in mind, right? We had this massive fall this morning, right? And then we kind of bounced off the trend line. But what do? We came right back into that 214 to 215 range on these kind of candles right here. And what do? We rejected and came down even lower. That's not a good sign. We're so far actually showing some rejection from this 214 to 215 range already, right? That's why I want to recapture it. It's very important, right? So you can see back here, right, how it acted as a resistance and as a support, and even right here it acted as a support as well, right? So definitely want to recapture that range, in my opinion. Again, this is just my opinion. This is just what I am personally viewing. I could be completely wrong. I want to make that very clear. I don't have a crystal ball. I'm not like, some guy that knows everything. I can be wrong. I could be completely wrong. But as of right now, until we recapture at least 214 to 215, I do lean bearish. I don't like some situations that are setting up here, and I would expect a continued move to the downside to the low 200s, like very low 200s. As of right now, obviously, things change, we adapt. But that's what I see right now, and that's kind of what I am expecting as of right now as well. So yeah, in terms of options flow, Tesla, has about almost, we'll say, 12 million in bearish options flow. So nothing too crazy. Again, it's something, but it's nothing crazy. I mean, compared to NVIDIA, for instance, 55 million, right? But in terms of options flow, again, a lot of puts came in towards the end of the day. You can see here a decent amount of puts towards the end of the day, but throughout the day, pretty slow options day for the most part, to be completely honest. Nothing to really write home about. Nothing completely substantial came out, at least in my opinion. So, it is what it is. We can take a look at it over here as well. Maybe, maybe cheddar flow spotted something that, they didn't. But 4.7 million call that actually came in on cheddar flow over here, but it's a leap. I don't really look at leaps too much. We know the bulls are bullish very long term, but we care more about the next, few weeks to a few months. That's what we care about. So yeah, anyway, that's kind of what I'm seeing for Tesla, ladies and gentlemen. So as per usual, if you enjoyed, don't forget to hit that like button, and I'll see you for the next one. Peace.